Good morning and greetings from lockdown Sydney, a place, as you can see, that you can't even get a haircut. Thank you for virtually having me. I really am bitterly disappointed at not being able to be there in person and am really missing you all. I hope you and your families are all navigating COVID and are all well and healthy. At Evolution, whilst COVID has impacted almost every aspect of our lives and it has been a considerable stress and distraction, I am pleased that through careful planning and management, it has not impacted our business. Since we last met in person, which was pre-pandemic and some time ago, a lot has happened at Evolution. Whilst we have the same clarity and belief in our strategy, and that is that a concentrated, high-quality portfolio focused on margin over volume is the best path to value creation, today we are a stronger, better company. At Evolution, we are building a gold company that can prosper through the cycle, or using Warren Buffett's analogy, has a moat. Equally importantly, we're also demonstrating that gold mining can be a great high-margin business which generates outstanding returns on the capital invested. Starting with a quick snapshot of the company, we have a market capitalization of around $5.3 billion, 26.4 million ounces in resources and almost 10 million ounces in reserves. We purposefully and deliberately estimate our reserves at a very conservative gold price of $1,090 an ounce, which is pretty close to that magic $1,000 an ounce which Randgold used to estimate its reserves so successfully for many years. These resources and reserves do not include our recent acquisitions at Battle North or Kundana, and they will be included in our December 2021 update. This financial year, which for us runs to 30 June 2022, we expect to produce between 700 and 760,000 ounces of gold. We have, over the next 3 years, a very clear organic pathway to produce around 1 million ounces of gold, which, I'm going to emphasize this right through my presentation, are going to be quality ounces. That's our focus at Evolution. All of these ounces will be produced at an all-in sustaining cost which on average is less than $1,000 an ounce, which makes us one of the lowest cost gold producers in the world. As you'll see in the presentation, we have materially upgraded the quality of our portfolio, and we now have a portfolio mine life of around 13 years. Keep it simple is our approach. High quality ounces with long mine lives are going to deliver the best shareholder value. Some of you may recall that when I first presented at this forum, a long time ago as a much younger man, I told you that China was globalizing and a place to invest in. And it was. Today, as you well know, a lot has changed since then. As the world grapples with an increasingly assertive China, particularly in resource-rich developing countries, and also the continued fallout of this pandemic, my view is that investors will increasingly need to focus on the location of the assets. Our entire portfolio, by careful design and no accident, is located in the Tier 1 jurisdictions of Canada and Australia, amongst the highest rated countries based on the Fraser Institute and the World Bank. Not only are they places where the rule of law can be relied on, but they're geologically very prospective and they have great mining skills. A company's approach to sustainability is going to increasingly differentiate it. Financial institutions are finding that their investors are demanding more proactive action. As Larry Fink, the chairman and CEO of BlackRock, correctly says, there is no company whose business model will not be profoundly affected by the transition to a net zero emissions economy. That is why we are positioning ourselves ahead of the curve. Demonstrating this is our commitment to a 30% reduction in carbon emissions by 2030 and a net zero by 2050. We know where our emissions are. 53% are at COWAL. We know the pathway to reduce them. Renewable energy is the best way, and we're absolutely committed to doing this. We're also very proud of our MSCI ESG rating, which has been recently upgraded to AA, and that is the highest rating of our global gold mining peers. The holy grail for any business is to create shareholder value. On this slide, we have tried to unpack how we believe we consistently can deliver this at Evolution and have done this over the last decade as we've been a company. Starting at the top level and the strategic level, we want a concentrated portfolio of 6 to 8 assets. We want to always be looking at acquisitions or divestments through the lens of ensuring that that move will improve the quality of our portfolio. And I pause here because it is a big and it is accretive to our shareholders. Then looking at the value drivers to deliver this, and starting at the foundation, and the most important one from our perspective is geological upside. It must be present and is an absolutely non-negotiable. It is the foundation of any due diligence that we do. Delivering this upside and banking more ounces to resource and reserves than you paid for up front is the surest way to create value in our industry. We are also comfortable to trade a short mine life asset like Cracow or a higher cost asset like Edna May for long life, low cost opportunities like Ernest Henry and COWAL. In both of these exits at Cracow and Edna May, we retained exposure and upside to the asset post-divestment through royalty agreements. We also seek deep turnaround opportunities, and Red Lake fits firmly in this category. That is why we were able to acquire it cheaply, but with 11 million ounces in resource and great geological upside, I'm certain that the time, effort, and capital required to recapitalize and revitalize this asset is going to create enormous shareholder value. We seek genuine synergies. It is why we acquired the Battle North assets, which consolidates the Red Lake district and accelerates our pathway to 350,000 ounces of low-cost production at this asset. Recently, we closed the acquisition of the Kundana assets from Northern Star, a game changer for our Mungari operation, and elevates it to a 4th cornerstone asset for Evolution. It provides the Mungari operation with immediate access to significantly larger volumes of higher grade material and the opportunity to extract synergies which were just not available to Northern Star or Evolution in the absence of this transaction. We also seek out motivated sellers. For strategic or other reasons, they were motivated to sell. Barrick, Glencore, Newmont, and most recently Northern Star all fit in this category. The only way in the current environments that a gold business is going to attract investor attention today is to demonstrate that we have learned the lessons of the past, are good custodians of our shareholders' capital, and only invest that capital in assets that generate an appropriate risk-weighted return. We have generated a return on investment at COWAL, Mungari, and Ernest Henry of between 17% and 26% per annum. At each of these assets, we have materially extended the mine life, and we are very confident we'll be able to do the same at Red Lake. By constantly seeking out these type of opportunities, we've been able to generate an EBITDA margin of between 46% and 53% over the last 6 years for every ounce of gold that we have produced. That, by any measure, is a very high margin business. Importantly, our highest margin assets, with margins well in excess of the group average, are our cornerstone assets, which also have the longest mine lives. So turning briefly to each of these cornerstone assets. COWAL. It's a world-class asset. We acquired it in 2015. At that point, it was scheduled to close in 2024. Today, we are confident that we'll be producing gold at COWAL in 2040. We've increased reserves from 1.6 million ounces to 4.6 million ounces. We've produced 1.4 million ounces of low-cost gold, That's generated operating cash flow of $1.2 billion US. We've invested a significant portion of that into the future of the operation, but we have still generated net mine cash flow of $570 million US from COWAL. In July, we announced the next exciting step in its journey, in the mine's journey, and that's the development of an underground mine, which will see production ramp up from the current production rates of around 230,000 ounces to a sustainable 350,000 ounces a year, and it will reduce our all-in sustaining costs at that asset by 28%. We expect to deliver the first underground ore to the mill in the second half of FY23, which is around 18 months away. We've owned Red Lake since April last year, which is around 17 months. This was a mine that since 2015 has been undercapitalized, starved of investments, and especially investment in mine development, which has been needed to replenish production areas, and was essentially a mine that was headed to closure. In our view, Red Lake ticks every box in terms of a value creation opportunity. It is a significant 11 million ounce resource base with significant exploration upside, a deep turnaround opportunity across almost every aspect of the operation, and a clear pathway to restore it back to being a premier low-cost Canadian gold mine. In May, we completed the acquisition of Battle North, which owned the tenements which are contiguous to ours. We now have consolidated the Red Lake belt and have tenements covering approximately 740 square kilometres. Battle North also came with another very important asset, and that is an efficient and fairly new mill. This brings the milling capacity, which we now own and is available to us at Red Lake, to 1.5 million tonnes of milling capacity, and we believe is easily expandable to over 2 million tonnes of capacity. So with the milling milling capacity now solved, our focus has turned firmly onto a turnaround at the mining phase. Because there's no doubt that the key to unlocking value at Red Lake is expanding the number of mining horizons. Currently there are 3, and this is where we are getting the ore from. Lower Red Lake, Lower Campbell, and Upper Koshner. Ore is extracted from these areas and delivered to the surface via shaft. All 3 have suffered from being undercapitalized and depleting their mining fronts. Not because there isn't any gold there, because there's been no development to access the gold. There are no broken ore stocks and no alternative production areas available, and essentially there is no plan B. So these are our immediate priorities, and these are the areas we are focusing on. Increasing development rates. We have a near-term target of achieving consistently over 1,200 metres of development a month. Improving mining practices to minimise dilution, and improving productivity through using more efficient equipment. When we acquired Red Lake, we said that our first target was a turnaround of the operation to produce 200,000 ounces of gold at an all-in sustaining cost of less than $1,000 an ounce within 3 years of acquisition. Last financial year, the first which the operation was under our ownership, the operation achieved our production and cost guidance, and we are on track to deliver that 3-year turnaround target. But we also believe that we can do more. Our 5-year transformation plan is to take the asset to another level and consistently produce over 350,000 ounces of low-cost gold. To do this, we are opening up 2 additional mining horizons. A decline development into the Upper Campbell area and also an area opening up access to the Lower Koshner area. With 5 mining horizons, we do expect to be able to fill the mills with 2 million tonnes of ore and get us to that 350,000 ounces of production. But there's also further optionality and opportunity for additional mining fronts, and that's H.G. Young and McFinley. And of course, there's exploration upside, and our geologists are very excited by it and are very active on it. Where better to explore for gold than a place that has already produced a huge amount of it? Restoring Red Lake to a premier Canadian gold mine is the journey we are on, and this will undoubtedly create massive value for our shareholders. We acquired our ownership of MUNGARI, situated on the famous Zulika Shear about 20 kilometres west of Kalgoorlie, in 2015 from La Mancha. Since then, we've earned an average return on capital each year of 16% per annum. You know the story of the grass is always greener on the other side? Well, in this case, it's true. Northern Star owned the Kundana operations, which is on the same geological structure as our Frogs Leg deposit. Evolution has long coveted these assets. This is because the combination through acquisition makes so much industrial and commercial sense. And let me explain why. Our MUNGARI mill is a modern and highly efficient mill, albeit confronting a declining production profile as our high-grade Frogs Leg mine depletes and more low-grade material is going to be fed into the mill. On these neighbouring tenements, the Kundana tenements, Northern Star has been successfully operating several high-grade mines, but doesn't have a mill nearby, so it trucks its ore effectively past our MUNGARI mill, 55 kilometres away to Kanana Bell. So the consolidation of these assets is really a game changer for MUNGARI. As you can see from this diagram, the tenements are contiguous, so we have again consolidated a district. And most importantly, we now have immediate access to significantly larger volumes of higher grade ore and the opportunity to extract synergies which were just not available to either Northern Star or ourselves in the absence of this transaction. Mineral resource and reserves at MUNGARI will double, but as the old adage goes, grade is king. And these reserves, which we're acquiring, are 3 grams per tonne higher, and I'm very confident, higher than our existing reserve base, and I'm very confident that these assets will underpin many good years of production at MUNGARI in the future. We now have a mine life that we estimate to be around 13 years. We have prided ourselves at Evolution on only doing deals when they are accretive to our shareholders, and this particular opportunity and all the others we've discussed to date, this box is definitely ticked. It's easy to skip over Ernest Henry because in our portfolio it's a quiet achiever, but that doesn't really do it justice. Our investment in this asset has generated an average return on capital of 26% and has delivered $815 million in the 5 years we have owned it. Drilling has been occurring over the last 18 months, targeting a 3 to 5 year mine life extension beyond the current mine life, which goes out to 2026. The drilling results have been encouraging. A concept study has been completed, and that will lead into a pre-feasibility study, but we have confidence that there will be an extension to this ore body and mine life. In many ways, this graphic summarizes the journey that Evolution is on. A concentrated portfolio of long-life, high-margin assets in the Tier 1 jurisdictions of Australia and Canada. That, in our view, as I've said a couple of times in this presentation, is the pathway to building a unique gold business that will prosper through the cycle. A good test of shareholder rewards and business efficiency is dividends. We recently declared our 17th consecutive dividend. This one being 5 Australian cents per share, and it's fully franked, which is important to Australian shareholders, and brings the total money that we've returned via dividends to our shareholders to 943 million Australian dollars, or just over $700 million US dollars. We've also continued to strengthen our balance sheet, and it is positioned to support our strategy going forward. We recently finished the FY21 year with a low leverage of 0.5 times EBITDA and modest gearing of 15%. Our revolving credit facility of 360 million Australian dollars remains undrawn. In recognition of the work that we've done over the last few years, we received an investment-grade credit rating, which allowed us to price a debut debt placement in the US private placement market for $550 million US dollars. The key benefits of this change in these debt arrangements are lower funding costs, which are important, increased average maturity, which is now out to 7 years, which is important, and no material debt repayments until FY26. Finally, I've put to you that there is and should not be any mystery to building a successful gold business. Because fundamentally, we need to deliver what any other business does, and we need to be measured against those metrics, and that's shareholder returns. At Evolution, we are doing this. We have a concentrated, high-quality, high-margin portfolio, delivering superior returns on capital, as I've described through this presentation. We're returning money to our shareholders via dividends, and we are only doing things which are accretive to our shareholders. This will ensure that we have a business that will both prosper through the cycle and generate superior returns for our shareholders. We have a simple but powerful belief of our responsibility to our shareholders, our employees, and the communities in which we operate. And that is, we say, we do, we deliver. We are committed to continuing to do this. Thank you.